Well, good morning, everybody, and welcome to the Minnesota Real Estate Show. Thank you for joining us. And again, good morning, August the 2nd. Can you believe we're into August? This is the Minnesota Real Estate Show every Saturday morning. Show is hosted by Mike Overson, Illuminate Bank, Scott Olmering, myself, Ryan O'Neill, with the Minnesota Real Estate team and RE/MAX Advantage Plus. Hope your weekend's starting off well. Again, we are live and local here at CCO. Welcome your questions, comments, thoughts anytime throughout the show as well. 612-294-6949 is how you can join us. Scott, good morning to you, buddy. Thanks for being here as always, and good morning.
Yeah, morning to you guys. Appreciate everybody tuning in. Like Ryan said, we're going to get rolling here pretty quick. Talk everything real estate and mortgage related. Love your input. 612-294-6949 is how you can go live on air, or you can just text us a question, or if you're following us on social media, just type it in and we'll handle it as it comes.
Yeah, again, Mike Overson going to be joining us here, of course, and Brad Sanford, Farmers Insurance. Brad helped a client this week get some insurance. Nice work as always there, bud.
Thank you. Thanks for letting me be a part of that. That's awesome.
Yeah, and it was it needed some real twists and turns to get it done. One of the many reasons we love working with Brad. Awesome customer service, follow through, getting it done. Scott, it's nice to see you on video here today. I'm looking at you here on video.
How are you? I'm trying to. There we go. I can never find out how to share it. So
it's now like we're at a restaurant. He's on his phone.
Now we're shared.
All right. Hey, we're going live on WCCO. I've got my glasses because I'm getting older and hopefully wiser here. But again, 612-294-6949 is how you can join us. Thanks so many folks for joining us on social media. We do appreciate it. I hope your weekend's starting off well. Hey, good morning. Welcome to the Minnesota Real Estate Show. Saturday morning, August the 2nd, 10 a.m. to 11 a.m. This is the Minnesota Real Estate Show hosted by Mike Overson of Illuminate Bank, Scott Wolmering, and myself, Ryan O'Neill, with the Minnesota Real Estate team, RE/MAX Advantage Plus. This is a live show, local. You can join us by phone or text at any time from 10 to 11, 612-294-6949. It comes to us right here in studio. 612-294-6949 is how you can join us. Scott, good morning, buddy.
Yeah, good to be here. Appreciate everybody tuning in, either on social media or on the radio. This is the Minnesota Real Estate Show, and that's what we do is we talk real estate. It's interesting. Ryan and I, if you've caught the show through the last 20 years, always talk about there are certain issues in any market. It's doesn't matter what you're in. There's always an issue. The one we're dealing with right now is interest rates being too high, unaffordability. But I'm watching a series of the 60s, 70s, 80s, 90s, 2000s. And of course, I'm in the 2000s now, and 2008, when everything just crashed. You couldn't get a showing. You get one or two showings every 4 months.
Yeah, right.
It was so there are struggles no matter what market you're in. That was obviously a big struggle because you'd have 30 listings and everybody hates your guts because you're not getting any showings on the houses. Nobody's writing offers. It was a brutal time.
Yeah, for agents listening, those mortgage professionals, title folks, really, yeah, as we know, every market has different challenges, different positives as well. What's interesting right now, we might as well dive in to weekly stats of what's going on real estate wise here locally. And again, these are comparing year over year numbers in the Twin Cities metro area. So Scott, new homes that came on the market down about 6%, 1,460. New homes pending sales or accepted purchase agreements up almost 10% year over year, 1,037. And then the inventory, very similar. It's up about 5%, but it's 10,207 homes for sale. Median sales price, as we noted last week, first time we've seen a 4 in front of it. Now over 400,000, 401,000. And Scott, here's the last thing I'm going to share to get your comments. I was reading an article about baby boomers are sitting on nearly $19 trillion in real estate. Baby boomers across the United States are sitting on a staggering amount of $19 trillion worth of real estate, over half of the nation's real estate wealth. And this was an article I was reading on realtor.com. It talked about some of the different hotbed areas. Obviously, Florida is one of the top on the list. They said Sunshine State offers warm weather, no income tax, lifestyle, California, others. But isn't that interesting? That is a lot of real estate for the boomers, Scott.
Yeah, and I always try to get the boomers were 54 to 64 or 50 to 64 or something like that.
Yeah, they actually
when they were born.
Yeah, they actually went on to say here, and I'll share this, the numbers, specifically those born between 1946 and 1964 have they just said they've planted roots across the country. So 46 to 64.
Yeah, that's a lot. That's a lot of pent up real estate. You know, it's interesting. We were talking, Mike, before you got here. I've been watching this series of the 1960s, 1970s, 80s, 90s, 2000s. So now I'm in the 2000s, when everything hit the fan in 2008, where everything just crashed. It actually started in 2006, but they call it the big crash in 2008. And just the struggles that you have in any market. That was a big one. I've asked before, would you rather have to write 15 offers to get somebody a house, or would you rather have one showing on all your listings over like 4 months? Because we had that, we've had that through the years. It's either one or the other sometimes.
Yeah, what do you think there, Mr. Mike? Again, Mike Overson, Lumine Bank.
It is kind of crazy if you look at what we've seen in our careers. We've seen probably the biggest crash and the craziest market as far as no one could sell a house.
Yeah.
And then we see the COVID times where it was the complete opposite.
Yeah.
I remember one client back in the crash there, everything was bank mediated, short sales, foreclosures, this and that.
52% of all transactions were bank mediated.
The one client that sticks out to me was they made an offer on a short sale, and they waited 14 months to get an answer, and they got the no at the end from the bank. So they made an offer, got it accepted by the seller. The seller had to go to their bank and say, hey, bank, will you take less than what we owe for this? Waited 14 months and got the no at the end.
Yeah.
So
yeah, it's interesting. Again, pending sales up almost 10%. Mike, what are we seeing here in the first break? Just an interest rate update. How are we looking?
Yesterday was great. Jobs report was bad. It was weak, and our interest rates went down an eighth to a quarter yesterday alone. It was a great day for interest rates. It's one of those things when you get this big of a movement one day, you typically get a little bit of a rebound. So I'm expecting to lose some of the ground we gained yesterday, earlier next week. But it's a great day for rates. I was locking some at 6.375, some at 6.5.
Wow.
Yesterday on a conventional 30-year fix. That means we got FHAs and VAs sitting, at 5.875, 5.99. So we're sitting pretty good, I'd say.
Yeah, we're up against our first break here at the Minnesota Real Estate Show. Before we do break, I got to give a shout out, Miss Angie Savageau. It's her birthday today.
Hey, happy birthday.
Yeah, happy birthday to Angie. Angie and Jordan, last year's Agent of the Year for the Minnesota Real Estate Team, a special award voted on by all the agents of the team. Angie just does, and Jordy do a ton of business. So a big birthday. It's also my Uncle Gene's birthday, my dear brother, Uncle Gene. Uncle Gene's up north, wonderful guy, was a high school principal up in Forest Lake for a long time.
Of course he was. Is anybody in your family not a high school principal? any male not
Hey, my brother,
a high school principal, a counselor, getting cats out of trees.
By the way, my brother Tom, before the break, my brother Tom is a teacher, of course.
No.
But Tom is a listener of the Minnesota Real Estate Show. He sends us a lot of good content from week to week. Hey, maybe you should talk about this. So thank you, Thomas. We appreciate that. He'd be fun to have on air too. He'd give you a run for your money, Scott.
Yeah, he would.
He'd give you a run. Hey, this is the Minnesota Real Estate Show, 612-294-6949. We'll be back after the break. Mike, good to see you.
Good to see you, Ryan.
Brad was commenting, we have similar shirts today and talking about wearing color a lot. Do you wear color a lot?
Sure.
Well, first of all, I'm lost on
Well-
the fact that you guys are wearing color. I mean, is gray a color?
No, so Brad's wearing black because he had a comment that he wears too much color.
Too much color. Yes.
No.
No.
So there's your random thought. Mike's like, what are we talking about?
Words I never thought I would hear.
Yeah.
Ryan is the black sheep of the family because everybody else is a principal or teacher, and he's a realtor.
Yeah, no, there's other ones that do stuff, but they're. I used to make fun of them because he'd have like a little family reunion or whatever, and I said, "What does everybody get their abacuses out and like you have speed abacus tournaments or
Everyone writes an essay.
yeah, everybody
Writes an essay. No, here's the funny thing. We were just talking about college off air and how difficult it is now for kids to get in to these schools, how competitive it is. I think for like a lot of us when we were going to school, it was a little bit less competitive, frankly. There's no way, just knowing now, like going to Notre Dame, I don't think I would have got in now, knowing what a lot of these kids have to do to get in.
Well, I know that I won't call out which one of my daughters. They were both good students, but one of my daughters was a straight A student, and was involved in a lot of things, and wanted to go to Madison. No way, she was not getting into Madison. I mean, everybody was a 4.0 student, and then it was,
Dang.
are you a part of the O'Neill family where you help everybody else? And, all these things. They were like, wait a minute, you're a Wolmering. Sorry, tell your dad you're not in.
Yeah.
Brad Sanford again, Farmers Insurance. All of our partners are at mnrealestateshow.com. These are good folks that we've worked with for a long time that help buyers, sellers, fellow agents on our team, folks in the market. Brad, appreciate all you're doing, bud. You're working hard as always.
Yeah, I love being part of the team, the camaraderie that you guys have, able to joke with each other and do business and all that stuff. It's amazing. Fun.
Yeah, we're going back live on air on CCO. Thanks for joining us. Welcome back to the second segment of the Minnesota Real Estate Show. We appreciate you joining us. We touched on again just an update, mortgage-wise, real estate-wise. Mike, maybe comment a little bit more on that jobs report. I saw in the news as well after the jobs report, Mr. Trump was not happy. Ended up firing the person who was the statistics person.
The counter.
Yes.
The guy that counts the new jobs.
Yes.
He had 253,000 he missed. He didn't move one of the periods or one of the commas.
So unhappy about, but it's interesting how the negative report. Okay. But the other thing I heard about the Feds, because the Fed didn't lower rates, is they now think because of this poorer job reports that they're almost confident in September they're going to lower the rate now. So that's interesting. You know what I mean? It's like that's what Trump wants. And he got the bad jobs report and could lead to lower rates.
Yeah, I mean, in general, anything that's like bad for the economy is good for mortgage interest rates. That's just one kind of simple rule to look at it. So it's like a jobs report. If that comes in bad, that's typically bad for the economy. Well, it's good for rates, and that's why our rates went down an eighth to a quarter. In yesterday alone. So that's just one weird thing to keep in mind, right? There's so many moving parts. This is like, well, wouldn't that make that better? Wouldn't that make that worse or whatever? Just in general, no, if it's bad for the economy, it's good for interest rates.
Yeah, Scott, from a buying, selling standpoint, what are you seeing, feeling in the market, talking to agents out there? I've heard a lot, 400 and under busy, some price ranges, a lot of price reductions, not as much activity out there.
Yeah, I mean, it's I think in the last 60 days, I've had a lot of agents that have called that, hey, are you seeing it kind of pick up? Are you seeing, it feels like it's picking up, we're getting more showings. And I think that there definitely is that. Well, look, we had 6% less listings coming on last week, but we were up 10% in pendings. So they're out there. And I think it happens a little bit with a market like this where you sat around. Now you're getting into August. You wanted to buy a house this year. You kept expecting rates to drop, excuse me, and they haven't. And so you just, at some point, you got to dive in, and then you just have to float the rates and watch what happens with them and jump in when it makes sense.
Mike, are you seeing a lot of purchase agreements come over at Luminate Bank for townhomes and condos versus single family homes?
Yeah. We're just as many, townhomes and condos going on today as previous. On the condo side of things, it's definitely getting trickier. You'll have you'll have more deals fall out, or more deals maybe change types of financing on the condo side of things, just because of all the association stuff.
Yeah.
I even ran into my first townhouse this week where the insurance with the association didn't meet guidelines for Fannie Mae, but it did for Freddie Mac. And when a townhouse starts not meeting those requirements, it like that starts raising the red flags and perking my ears up, right? I'm like, okay, I haven't seen that. I haven't run into that before. So now how many more times am I going to see that in the future? But just know condo fund, anything with an association is just a little bit different now these days. So just know that, it's typically a bumpier road. You do get to the finish line most of the time, but it's a little bumpy at times.
Text question that came in again. You can text us anytime, 612-294-6949, or call us here at the Minnesota Real Estate Show. Mike, this one just says interest rates for a cash out refinance. Maybe talk about that. What is a cash out refinance?
Yeah, cash out refinance is where you're going to take additional funds above and beyond what your current loan balance is. So if you owe $200 on your house, and you want to put $100,000 in your pocket for whatever reason, right? So you want to do a loan amount for $300,000, you're going to have $100,000 cash out there in your pocket. So whenever you look at cash out refinances, typically those interest rates are higher than what you see out there for a purchase or a rate and term. I typically just tell people, add a quarter roughly to the interest rate, and that's what you're going to be looking at for cash out.
Cash out refinance. Scott, we were talking a little bit about short sales. We're actually seeing some short sales in our market. Different situations, you have to have a hardship of some sort. But in many cases, we are still seeing some. Mike, what do you got there, bud?
Question.
Raising your hand.
Yes. So if someone's got a short sale going on right now, right, with the appreciation and all that stuff we've seen lately, are these people that just went way over during the COVID times? Or
the only thing I could think, as Ryan was talking, the only way that I could fit in somebody that would need to go into foreclosure or that would need to go into a short sale is if they bought in that window of about 6 months in 2022. But then you got a 2.7% rate. So it's not like your payment's not affordable, but you definitely are upside down in your house. I can't imagine anybody else in the next 5 to 10 years ago that bought a house and is not on the positive side of it. Because the other thing, again, watching that 2010 years, people were using their houses as a piggy bank. You'd buy it for $250, you'd refinance it for $350. 8 months later, you'd refinance it for $500. And banks were just doing it because they were going on credit scores. So, I don't know. I don't know.
Question here about title insurance, locking it with title, kind of different types of products out there. Scott, thoughts on that with title, some of those title lock companies you see on TV and things?
Yeah, I don't want to call anybody a fraud. I don't want to call. I'm sure there must be some value to it. I have never heard of anybody having anything like that done to their title. We've talked about it on the show. So if anybody out there is listening to the show and you've had your title stolen from you and somebody, everything they say, somebody went in and signed your documents. Yeah, it's not that easy. You're not gonna auto sign a document to be able to pull out money from a property. I don't care. And so I've never seen it. I've never talked to a title company that's ever seen it. So if somebody out there has actually run into it and I'm just off base, give us a call, let us know, because I don't see it.
Yeah, the one thing that is a little different now when you're buying a home is you have to wire the funds. So instead of bringing checks or cashier's checks or anything, what you end up doing is you wire the funds you need to the title company, and the title company has a really secure process. For example, trademark title, it's very secure process, secure emails, encrypted, getting information to the actual bank account where you're wiring it. It's never going to be sent to you just in a normal email. Sometimes I've heard stories of people where they get an email from someone, they think it's the title company, but it's not. They always require a phone call too. So you got to call and say, "Hey, Brad, this is Frank at such and such title company. Here's the information." So just be sure you do that, when you're buying a home.
I got a weird mail, or the wife and I got a weird mail, and we kind of made us alert to something like this. So we looked into it. The catch with the title lock is that they tell you that somebody put something on your title.
Oh,
so
sure.
It's like a little late, right? So we they probably don't sponsor you, but LifeLock,
Okay.
we get notified when somebody tries to take our information first, so that we can stop it right there.
But what I'm saying is, do you do you really need LifeLock? Because they can get your information, but what they say on the commercial is, and then they use your name and they sign, and then they go in and get their check for $200,000, and all of a sudden you realize that there's 3-second mortgages on your house and your house is gone. I cannot for the life of me figure out how they could do any of that.
Yeah,
Any of it.
Yeah, it's become a pretty much more secure process. Mike, obviously you can speak to the lending side, but just from a title side, knowing what's all involved with that, because obviously from a title company standpoint, that's their job, is to be sure that they're conveying clear title, and their processes are secure and that type of thing. From a lending standpoint too, Mike, just with all the documentation and encryption and everything that needs to be signed from your end too.
I mean, with the amount of paperwork we have these days and all that stuff, I mean, people are like, I go through the loan process and I feel like I got to give them my blood type,
Yes.
and go into the hospital and like give them a blood sample for all that. But the reason is because it's for this reason. It's right. It's the safety, it's the protection. It's like, we're making sure that you are you type of deal. So yeah, can it be a pain in the butt? Absolutely. Is it there to help protect you and keep things like this from happening? Absolutely.
Well, think about that. Well, I mean, you do this every day. Is it possible for me to steal Ryan's information, get a second mortgage on his house, and then we do all of this because you're not meeting with anybody in person because they'd have to have an ID. So you're doing all this online, and you're going to let me sign and get a $200,000 loan on one of Ryan's properties. Is there any mechanism that exists that could even make that could happen?
I mean, I don't think so, because you got to verify your ID unless you had because you're going to have to go into a title company and have to sign.
That's what I
right?
mean.
You have to go in there. So you have to have a picture ID to show that. So basically, it'd have to be your picture, but Ryan's info. You know what I mean? So you're doing a fake ID, you're doing all this stuff. I mean, I think there's too many safety nets along the way.
Scott's got a really nice ID picture. Right, Scott?
It's awesome.
Hey.
All my pictures.
Hey, we've got a couple
Just says it's 11
questions.
on it.
We got a couple questions, but before we do, we're gonna break halfway point here at the Minnesota Real Estate Show. Hey, we got a golf tournament going on this coming Thursday, August 7th. It is the annual O'Neill Foundation of Hope Charity Golf Tournament. Everybody is welcome, whether you golf once a year or you're an avid golfer. It's over in Oakdale at Oak Marsh, the Oak Marsh Golf Course. It's a 4-person scramble. And it, again, Thursday, August 7th, this coming Thursday, registrations at 10:30. And again, you can even just Google it, O'Neill Foundation of Hope Charity Golf Tournament. But you can golf, you can sponsor, and we've also got a silent auction as well, a cool link that's got a number of great silent auction items as well. And lastly, we've got an anonymous donor who has graciously stepped up to match any and all funds raised from this. So it'll be a great day to raise some money for the O'Neill Foundation of Hope to help a lot of people struggling in our community. Please check that out online. This is the Minnesota Real Estate Show. So Title Lock, we got on a little tangent there, guys.
What it reminds me of, there's a lot of fear-based stuff to it. Because like I was just asking, I'm like, I cannot figure out how you could do it.
Yeah.
And it's like there's a commercial that's out. Everybody's probably heard it, where they'll purchase your house and they'll do it in 2 days, and it just drives me nuts because I'm like, no, you can't do it in 2 days. I mean, even if you're cash, there's still title work to be done. It's like you're not buying the house in 2 days. And when does the 2 days start? Does it start when you first met them, or does it start when you say, okay, our 2 days starts now?
Yeah.
Mike,
it's just all fear.
Mike, what's the reason Fannie Mae wouldn't accept an HOA and Freddie Mac would? What are the tolerances?
This particular one was how their insurance was set up. So Fannie Mae had a little bit tighter master insurance policy rules, right? You needed X amount of coverage per building, and Fannie Mae's was higher than Freddie Mac. So the way that they had their insurance set up now, it didn't meet Fannie Mae's guidelines, but Freddie Mac it did. So because it was like, hey, they only had $1 million coverage for this for 22 units, and Fannie Mae needs more, but it still meets Freddie Mac because they don't have that high requirement. And then it ended up working in luckily I had it already locked with the Freddie product, so we didn't have to do anything different. But
Brad, with your insurance business, again, Brad Sanford Farmers Insurance, what are you seeing with HOAs and insurance costs and that type of thing?
Well, a couple carriers got out of the business of doing it, so maybe the new carrier didn't know what Fannie Mae's rules were. I would think they would, but yeah, I've seen a lot of them get out because they just do not like the costs that are being incurred with all the storms and the roofs. And you can imagine 130 unit apartment complex or condo complex, it gets hit. It's a big cost, right? To that, to the siding. So taking too many losses, a couple of them got out. So policies are changing. And what they're doing is the HOA is saying, we don't want a higher deductible. So they're either doing co-insurance where they're insuring 10% of themselves and that kind of thing, or so they're changing the terms.
That's an interesting
or
thing.
Very
cash,
boring, I know. Yes.
or cash value. Cash value. Conventional loans don't allow cash value.
Right. Yes.
Which, are you guys familiar with that?
What do you mean by that?
So basically your insurance policy, what they pay out. So say, hey, I got a roof here. This roof would cost $1 million to replace. We're going to give you 15 years on it. So 1/15 every year goes that down. Well, if it's a 15-year-old roof, right, they're not going to cover any of it because there's no value left in there. So they're not going to cover any of it. And so that's not allowed either. So if there's a policy out there that has the cash value side of it for lending, it's like, wow.
Which is the replacement cost of what it would cost to replace that roof minus depreciation, as he just illustrated. So
Yeah.
Okay. Interesting. Very interesting. Well, we're going back. We're going back live on WCCO here. Appreciate you joining us, everybody. Welcome back to the second half of the Minnesota Real Estate Show. Each show, we like to feature some of our team's listings. The first one, Nadia Hoppy, a great agent with the Minnesota Real Estate Team Remax Advantage Plus, has one in Elk River for $425,000. It's 14124 192nd Avenue Northwest in Elk River. 4 beds on 1 level, fully renovated, new kitchen, furnace, AC, window siding, flooring, new composite deck, Scott. A 1.3 acre lot. And there's an open house today, Saturday, the 2nd of August, 12 to 2. Very nice one. Be sure to check that out. And then Bill Ebert. Bill's got a great condo in Edina for $149,900, 6423 Colony Way, number 2G. A lot of updates on this one, Scott. Carpeting, paint, appliances, stainless steel, quartz countertops. Again, it's 1 city block from Southdale, the Fairview Medical Campus, Lake Cornelia, Southdale Mall, Galleria. There is an outdoor pool located on the back side of the property for privacy. Again, check that one out. 6423 Colony Way, number 2G in Edina, 149. You can live in Edina for under 150.
Wow.
Yeah.
That's crazy. We had a question in on upper bracket property.
Yeah.
What are the most important things? Hold on. What are the most important things for evaluating an upper bracket property? What would you say
Most important things?
in evaluating an upper bracket property?
Well, you'd have to look at lot location. I think location's very important. You always talk about with upper bracket as well. People look for privacy. Often privacy is one of the top couple things people are looking for. Of course, the agent's going to look for some really good comparables, similar school district, similar above ground footage, similar total footage, style of home itself, amenities, features, condition, important, year built, some thinking out loud here a little bit.
Yeah, I was thinking about some of the kind of the different ones is I lost my train of thought.
Yeah.
Go ahead.
Yeah. I mean, when you think about that and even think about, a couple recent listings, I can think of team members that have sold too, that privacy piece, the lot piece becomes very important to people. And that's something, again, it's like anything. Again, I used to live on Lindale in Bloomington. I loved it. But when I resell that, it's going to be an issue because it's like 35W right now. There's and again, it's not super private, busy street, et cetera.
Yeah, I was going to say where I lost my train of thought was also looking at chinks in the armor. We always talk about that. They become much more important and cost a lot more as you get into $1.5 million, $2 million, $3 million, because people don't settle at that price range. So if you have things, for example, like a busy road that might only cost you $50,000. You get into the point where what number is it where somebody's still going to drop $1.5 million, you know, with a house that backs to a busy road? Is it $1 million? Is it $9 million? I mean, you get really deep in the weeds where it doesn't matter because you're still spending $2 million. You want what you want. And if there's those little chinks in the armor that go away, they hurt you a lot more in upper bracket property.
Well, and Mike, too, people obviously, you know, will consider new construction and what's available new construction wise in that area, what's being built, what are possibilities, you know, some things to think about. I know you do a lot of kind of upper bracket loans as well. Any other thoughts on this discussion?
You know, I do work with a builder here where the bread and butter for the last 10 years has been that, you know, 600 to probably 800, 850 price point.
Good luck.
Now venturing higher, right?
Oh,
now
you
venturing
can't
higher,
almost
going
do it.
up into like the 1 to 1.2 because there's a threshold there. It's like that middle range there has if there's been a stagnant range of prices, it's like been that range, right? And so he's seen it's like there's more opportunity now if I get into the upper bracket that those homes are still selling quicker, and he can not sit on the market as long and things like that. And so he's actually pushing up versus trying to go down. And I think it's going to work for him.
Yeah. I mean, if you haven't been in the real estate market for a while, a $600,000 new construction house, you would be absolutely amazed because most people in their minds still think, I mean, $600,000-700,000, that's a lot of money.
Absolutely.
That should be an incredible house. And it's not. I mean, and if it's got a 1,500 footprint, which is a decent sized 2-story, you're going to be $650 with an unfinished basement, you know? So, I mean, it's like what you have in your mind. And I think that's also been the struggle of the step up thing. It's like, okay, I'm selling my house for $550. I'm not that thrilled with the difference between what I'm selling at $550 and what I'm buying at $700.
Yeah.
You know, so, and again, a lot of that is just, we've been in an appreciating market for a long, long time, but
Want to welcome on Mr. Brad Sanford, Farmers Insurance, did some outstanding work this week, helping a friend who is having trouble securing insurance. Brad, it's always a pleasure, bud. Thanks for being here. Yeah, little Sanford and Son there for you, buddy.
There's my walk-up music. Thank you, Josh. Thank you.
There's your walk-in music. He asked Josh for a little walk-in music before he started.
Can I say I've experienced your guys' fan club in the last 6 weeks since I've been.
Oh
on here.
boy, tell me more.
So I've met the Hartzels down in Lake City. I've met the Schaefers in Savage.
yep.
Barb and Kurt Johnson. They are in the northern suburbs area, and then his brother Mark Johnson works with one of your guys' realtors, David Meyer.
Yeah, Dave.
yeah.
And
Great
so
age.
I was just astounded. I mean, they actually, I think Mark Johnson wanted your guys' autograph. He watched and listens to you guys every Saturday morning.
I yesterday I was with my dear mother. We were at a funeral down in New Prague, and as we were walking out, one of her friends came and said, "Hey, you know, love listening to the show on CCO." And they said, "I especially love when Scott talks." And so I just kind of shrunk a little bit. And I said, "You know what?" I said, "Absolutely." I said, "He's very wise, and thank you. You know, good to see you." But no, we appreciate it, Brad. We appreciate it. We have fun doing the show. You know, again, our motto with this is always just try to be a little helpful, get some good information out there. We're low pressure, have a little fun in the process. Life's a little too short, but we appreciate that. And that's why many reasons we love working with you and your team.
Well, that's, being able to help people. That's one of the things that drives me. So treating all new clients like their family and helping them understand what they're getting. That's really what I strive for. And that's why I love being a part of the team, because you guys do the same thing.
What's cooking insurance wise? Anything new, exciting for buyers, sellers to be aware of, existing homeowners, et cetera?
A couple things. The industry, we're expecting another 15% increase this year. Thank you
boy.
very much. Yep, absolutely. And then Mike kind of hit on what I'm seeing a lot of national carriers that are writing business in Minnesota. Again, they're not accepting roofs that are between 12 and 15 and over. So you're not getting replacement cost on those. You're getting actual cash value. As he explained, is replacement cost minus depreciation, which means you're putting probably 15, 20,000 into your own roof. if you need to get a new roof. So if you can imagine, you've had insurance for a long time, you haven't had damage, all of a sudden a storm hits your area, your roof is over 15 years old. If you don't have replacement cost covered, you are sunk right now. So it's a tough.
So I'm sorry, Brad. So because I misunderstood that when we were talking a little bit off air. So you can get full replacement coverage. You're paying extra for it. So that in 15 years, if your roof does go bad, you're not having to put out all the money. You're putting out a percentage of it.
Typically, the carriers now are saying that they're going to, during your policy term, because it renews every year, at one of those renewals, they will tell you that they're moving to a scheduled payment, which is a tier payment, right? A form of depreciation, or they're moving you to actual cash value, which then is your trigger to say, I need to find somebody that's going to insure my roof and give me replacement costs. Yep.
So if you file the claim, kind of the old adage, you think about car insurance or anything, oh, do I file the claim? I'm going to get hit. My premiums are going to get hit. Maybe talk about that a little bit. Okay, so you have your roof, you file a claim. What does that normally do to your premium?
If one of the biggest things I can tell everybody listening, and probably the greatest advice I can give you, is before you file a claim, talk to your agent. You would be amazed how many people call the 1-800 number, file a claim, and then the adjuster comes out. I don't get notified right away, right? The adjuster comes out and they don't have coverage. If they had called their agent, what I do is I get people that I work with to go out there, take a look at the roof, take a look at the siding, say, yep, there's enough damage that they would replace it, because every insurance carrier requires a certain number of hits per square foot. And so if it's not there, they're not going to replace it.
Wow.
So you definitely, when you are looking for new insurance, you're talking about premium, make sure that you're getting what it costs to replace your home, not what the market value is. And so there's a lot of software out there, like we use at Farmers. We use 360, which tells us what the average cost is for a 2x4, for a block, for cement, all that stuff, and what it would cost to replace your home. After that, it's adding coverage that makes you feel comfortable that if a storm happened, your home is protected. We're
going to keep chatting with Brad Sanford, Farmers Insurance. Again, you can join us 612-294-6949 at any time. Before the break, Jack Dickinson has a nice one, Scott, in Prior Lake, 4892 Bluff Heights Trail. This is a townhome, 289.9. 3-bed, 3-bath. It's close to downtown Prior Lake. You got a main bedroom with a private bathroom, a walkout patio on the lower level, main deck or deck on the main level, lots of privacy, a new water heater, furnace, and AC. And again, $289,900 priced at a recent price improvement. Check that one out again, 4892 Bluff Heights Trail in Prior Lake. This is the Minnesota Real Estate Show. So, Brad, it's going back to that insurance discussion, do you recommend higher deductibles?
That's what I was thinking.
As a way to compensate for the market right now, yes. Every being political like he did with that there, every agent that's experienced, that's getting out of the industry, is really glad they're getting out, because the industry is changing like every month. It's just amazing. And so you got carriers, national carriers, that are saying they don't want to do business last year, and now they want to come back, and they're giving a little bit better pricing, right? But now the largest insurance carrier in the nation is taking a 27% increase in the state, what we call a rate increase, taking rate. And now they're not writing any new umbrellas because the state wouldn't give them the ability to raise the rates by 80%. So
yeah, I mean,
a lot of changes.
I've thought about that. I've always thought about that through the years. So it's like when if somebody's paying $3,500, everybody's paying $3,500 a year for insurance on their house. Let's say that. I mean, one city or what happened in Florida, or I mean, any of that. I mean, those per hits could be 150 grand, 200 grand, 300 grand. So I've always thought at some point insurance isn't going to get hit, because I mean, that's like 30 years of premium wiped away in 2 minutes.
Yes, absolutely. Yeah. Yep. And that's when carriers will say, sorry guys, we're going to put you to actual cash value, and they're going to look for something else, right?
Little off topic. same thing apply for auto insurance?
Yeah.
Yes. If you say, look, I got in an accident, it's $5,000. My deductibles are $1,000. Do I file it? But then I get hit with, what do you do?
Always call your agent.
So call your agent.
Always call your agent.
That's good advice.
Absolutely. Yep, absolutely. Because it's your deductible is a certain amount. Maybe if it's like $200, $300 over that deductible, maybe you don't file a claim, because a lot of the carriers are coming into Minnesota nowadays. If you have water damage in the last 5 years, they're not writing you at all. They'll shut me down at application saying, nope, sorry. Done.
Wow.
Yeah.
So nothing at all.
Well, it is true to call your agent, because I had 5 kids and I had 5 on the road, and so it was disaster.
geez.
It was just disaster. You know, this totaled this car, and this one's got this. They ran into whatever, and you know what I
This
mean.
one ran into that one.
So I would call, because in some cases he would be like, just fix it, or you know what, you can turn this one in because of I don't know. He'd have some reason, but a lot of times it was no, just pay it out of pocket, or you know, if you do it, it's not going to affect it because you're in this group plan or whatever else. But yeah, you do want to know, because nothing worse than paying $1,000 a month for car insurance.
It's good advice though to just always call your
Always
agent
call,
just to ask about it, because I think, I mean, I don't know, but I just think about with the car insurance thing too. I mean, you're just like, well, do I file it? Do I not file it? What do I do?
And most of us standing here are extroverts, so we love to talk to our clients, right? So giving them a call should be a great experience for you.
Yeah.
Absolutely.
Scott struggles with that.
should be.
Oh yeah. Well,
Should be.
Should be.
Yeah,
You
here
don't have coverage. It's not, sorry.
we're going back live on
Might send that
air.
in an email.
Hey, welcome back to the Minnesota Real Estate Show. We appreciate you joining us every week. 612-294-6949. If you are looking to buy a home, sell a home, invest in real estate, you need a loan. You have lender questions. Please reach out at any time. Just real quick, our 30-second moment of hope, Scott, for this week. We helped a young lady. The O'Neill Foundation of Hope was experiencing some hardships, needed to pay her rent, and ended up needing to sell her laptop to a pawn shop. She's a student, was struggling to do her college courses on her phone. Her car was stolen and totaled, and she'd been taking buses, but of course buses are inconsistent, was having a hard time getting to work. And to make matters worse, if you can believe this, she was abducted on her way home from work and was assaulted and left on the street. This was a huge setback for this young adult, still dealing, of course, with the emotional wounds. She avoids walking at night. Anyway, the O'Neill Foundation of Help, we stepped in to help her with a number of things, but her laptop is now out of the pawn shop. Found a bike for her as well, so she's not having to take the bus. Those are the types of people that we work with. We help in different ways, people experiencing hardships. A wonderful young lady, Scott. No fun walking at night as a single lady. And but again, we're doing our best to help. O'NeillHope.org. Check it out.
Yeah, I mean, it's just a hand up when, you know, we Ryan and I were talking last week. You know, people need to understand that if you lose housing, you can't get a job because you don't have an address.
Yeah.
And so so one of the people that the foundation helped was living out of her car with her kids, and you're like, oh my God, can't she work? Well, yeah, she can, wants to, but if you don't have an address, you can't get a job. So how do you start the process? And that's what you guys seem to do, is give them the ability to help themselves where they actually can help themselves. So there's a foundation, give them a place to live. Now they can get a job, you know, and move on.
Yeah, sometimes you need that first step. You're exactly right, Scott, because it is increasingly difficult without an address. And a lot of times people say, hey, go to the shelters. Many of the shelters are full. And
Well, besides that, you go to a shelter.
yeah, and that's what
It's
you said last week. I had
it's
to laugh.
Yeah. I don't want to go to a shelter. I want to live normally, and that's what you guys said.
Especially if you got 5 kids.
Yeah.
Mike, go to a shelter. You got a big crew at home. But again, we're talking insurance from your standpoint, lending wise, you and Brad. I mean, I just think about, you're talking a lot. You are talking with insurance, someone like Brad a lot, Mike.
Yeah. It's just, I get that question a lot. It's like, you know, it's like, hey, because I always when I qualify someone, I got to estimate what the insurance is going to be, right? Because we have to qualify them with that in their payment. And so, one example, a guy was buying a house for $800,000, and the last few $800,000 homes I did, insurance was roughly, let's say, $5,000 or something like that. So his quote came back, and he was at like $8,500 for insurance. He's like, where would you pull your number from? I'm like, I'm just looking at the last few I did in that price point. This is where it came in at. He's like, well, mine came in so much higher. Well, he was paying $800,000 for this house. The replacement cost to rebuild this thing was like 1.35.
Yeah.
Right. And I'm like, that's why. It's because you're apparently getting a great deal on the same thing. Thing burns down to the ground. It's going to cost this much to rebuild it. That's why it's more.
Yeah.
Brad.
Plus, how much personal property do you have? How much coverage did you increase it? Do you have personal liability that you increased from 300,000 to $1 million? There's a lot of factors that could make your insurance a little bit more.
Yeah.
Brad, I love that you wear color often.
Thank you. I'm gonna have a conversation with my wife. We like color, honey.
Hey, before I forget, how do people get in touch with you again? How can they work with you? Obviously, they hear your commercials throughout the week here on WCCO. You do a wonderful job. For anybody looking any types of insurance, I encourage you to call Brad.
Well, obviously, your fan club can call you. You can give them my number. Thank you very much. Otherwise, they can call me at the office, 651-690-2076 or the MinnesotaRealEstateShow.com.
Great work. Great work. Keep wearing some color.
Absolutely.
What do you think about that, Scott?
I like his color. I think his wife's completely crazy for not liking his color. I think it's very sharp.
Hey,
I think you guys match.
we got a couple minutes. Mike, last thoughts for folks from a lending perspective. Luminate Bank, local. You guys are local. I know you've got a great savings account too. You guys are paying what, like 4% on it?
Yep. Our savings, just our normal savings, a little over 4% right now as far as the APY on it. So I get a lot of people, it's like, I want to put my money somewhere where I'm actually making some sort of interest, but I don't want it tied up in like a CD or something. I just want to have access to it. It's a great spot to put it, making a little over 4%, and it's in a savings account, so you can just grab and go when you want to.
And you got your branches, right? I mean, you're right in the Twin Cities here.
Yeah, absolutely. Yeah. Our corporate office, which is our main branch, is right off of 394 in Penn. So you can't really get any more central than that. And then we got a couple other branches around as well. So
Yeah. Brad?
And this is State Fair month, right?
State
So
Fair.
No,
You're,
that's right.
Scott loves the fair.
Love it.
Is
Can't
your
get
fan
enough.
club going to be able to see you there?
We are going to be live 1 week on the fair. Josh, when does the fair start?
It is the 21st, so we are 19 days away.
You going to be there, bud?
I am probably the biggest state fair guy in the whole.
Yeah, I love
All
it.
right.
Nice.
I love the fair.
I keep a lot of their workers' kids through college, as you can see.
Well, and Ryan and I have been working on crowd control this year because it got a little out of hand last year with people rushing the booth.
You're
that
so
we were in,
terrible.
So this year we've got some stuff worked out. Keep people back just a little bit back.
You're such a nut. You're such a nut. Can we? I mean, what in the world? Mike, what do you think? Last thoughts for folks here in heading into August in this market.
It's August is going to be our busiest month for closings within my branch. I can already see it already. It's going to be a great month. And I think it's due to the consistency of rates hanging around where they're at and forecasting that rates are just going to kind of trickle down. I think there's that confidence kind of coming back of like, hey, all right, I think things are settled down. They're on a good path here. And I think moving forward, they're just going to continue to get better. So it's still a great time to buy. So feel free to plug in with us. We'd love to help.
Yeah, applywithmike.com. Scott, we got just 20 seconds. Last thoughts?
No, just I don't have enough. I got a lot to say, but not in 20 seconds. You take us home.
You be that
No,
way.
you take us home.
You be that way, Scott. Brad, great job, Brad Sanford
Thank you.
Farmers
Remember,
Insurance.
I insure auto, home, apartments, businesses, everything.
Yeah, a little bit of everything. Encourage you to reach out to Brad. Wonderful guy. Big thanks to Josh Wheeler for coming in. Josh, thank you as always. We're grateful for you. Check out our golf tournament. Would love to have you take part next week. Everybody's welcome. The O'Neill Foundation of Hope. Enjoy the rest of this weekend, everybody. Take care. Hey, thanks for joining us, folks. Nice job. Not much color today. We all got black. Scott's got a little red on, or a little maroon of sorts. But hey, we appreciate joining us at State Fair. Are you
Salmon.
Mike? Are you pumped for the State Fair?
Yeah, absolutely.
I'm
not a huge state fair guy.
Love the state
I
fair.
do love the state
Love
fair.
the
I
state
love
fair.
going.
Yeah.
It is fun to go. Kind of people watch, try some foods, walk around.
was
My mom and dad.
What was that concert you took me to like 20 years
We went to
ago?
a Motley Crue
Motley
concert.
Crue.
Ooh, nice.
And yeah, so I call Scott up. Of course, he's not an 80s rock guy.
What?
So we walk into the thing, we're having a blast, and Scott's just like, Get me
my
outta
God,
here.
It looked like Minneapolis threw up. I was like, get me out of here.
What are you, 70s yacht club then?
No, I don't know. It was just not my crowd.
The crew is not yours, huh?
It was not my crowd.
Hey, everybody, enjoy the weekend. We'll see you soon. Thanks again for joining us. Take care. Bye-bye.